Welcome once again to Accounting for Great Course. Today we are still going to be looking at that question paper that we have been looking at before, the paper from the Northwest Province, September 2020. Today we are actually going to be looking at question number 3. Okay, I want you to pay attention. What I'm only going to be dealing with are the calculations. The calculations only on how to deal with the cash flow statement. There are key calculations that you are supposed to know so that your cash flow statement can actually be correct. Things like the amount for taxation paid, the dividends paid, and also the money for the fixed asset purchased or the proceeds from the fixed assets, the repurchase of shares. We also have got, of course, the last thing will be the cash and cash equivalents. So I'll simply be doing the calculations. I'm not going to prepare the cash flow statement for you. You already know how to do that. I'm only going to be dealing with those calculations. Once you know those calculations, there is no way you can make a wrong cash flow statement. Okay, so let's start. We are going to start with question number 3.1. Okay, do not forget to like this channel. Do not also forget to subscribe. If there's anything that you'd want to ask, anything that you want to say, don't forget to go to the comment section and write a comment. Thank you. So for now, let's go to the board and look at question number 3.1.1. Question 3.1.1. It's actually requiring us to prepare to complete the cash flow statement and show all the workings. Remember what I said? I'm going to show you all the workings. Okay, I'm going to show you all the workings, and we are going to start with the working on taxation paid. Taxation paid, I've already prepared a template for you. This is a note for taxation paid. Believe me, learners, if you know the note for taxation paid, even that other simple calculation that you do in brackets, it becomes very easy because you'll be knowing what to add and what to subtract. So let's look closely at this note. The item that you start with is the amount that is in the income statement. Remember, when we are doing the cash flow statement, you are given information from the income statement and also information from the balance sheet from the previous year and the current year, and then these extra adjustments. So these are the things that we use to do our cash flow statement. So for now, if you look at our note, the first thing that I've indicated is that amount in the income statement. So you go to the extract from the income statement, you look for the income tax. Our income tax that is given there is 656,100, and you put brackets on it. Okay? And then we identify the balance at the beginning of the financial year. Where do we get the balance? We go to the extract from the balance sheet or from the balance sheet from the previous year and the one from the current year. But since we want the balance at the beginning, it means we are going to 2019. Let's look at tax in 2019. SARS income tax in 2019 is 15,500 under the current assets section. When SARS income tax is appearing under the current assets section, it means it's a debit balance. Okay, then how do we record a debit balance? Okay, I'll give you this hint. That you can always use so that you know when to write negative. So this is my debit, this is my credit. Okay, I'll indicate here balance. BD, that's the balance at the beginning. Balance. CD, that's my balance at the end. Okay, here I said we've got 15,500. 15,500. And the 15,500, it's a debit balance. So if it is a debit balance, we are not going to make it negative. We are not going to put brackets on it, okay? So in other words, I'm saying that is positive. But whenever it is a credit balance, it's going to be a negative. Your balance now at the end, okay, the balance that we're given at the end is appearing under current liabilities. SARS income tax, 34,600, okay? It's appearing under the current liability. So according also to the hint that I've given you, if ever the balance at the end is appearing on the debit side, it means it's going to be negative. But it's appearing on the credit side, it means it's going to be positive. So the one that we have is appearing on the what? Current liabilities, which is the credit side, then it is a positive amount. We are not going to put brackets on it. Okay, once you have these three amounts, then you can calculate your taxation paid. If you play around with your calculator, minus 656,100 plus 15,500 plus 34,600, you are actually going to get something like 606 Is it 606? Let me check again with my calculator. 606,000. 606,000. Oh, once you know this now, then you can do what they require on your answer book. This you can do it sideways, maybe on the question paper or in a scribbler. But now in your answer book, they would want you to only open a bracket and show the calculation that we've done. If it was me, I would just start by saying 600 minus 650 according to what is shown here, 656,100, and then I say plus 15,500, and then I say plus 34,600. It's actually going to give me again 606,000 negative. Remember, this one is a what? It's an outflow. Okay, so it's supposed to be negative. So this is how you do the calculation, or this is how you deal with taxation paid. If you want to get the correct taxation paid, don't forget this hint that I've shown you here, so that you always know when to put brackets and when not to put them. Okay, thank you so much. I hope you've fully understood how to do this calculation. Whenever you are dealing with taxation paid, I would advise you to revisit your taxation paid note, and then after that you can always do your proper calculation as required according to the question, and then believe me, you'll be home and dry.